Hi, Dane Pymble here from Own Financial Planning. Today I'm going to talk to you about our asset allocation service. So it's important to note in this presentation that the information provided is general in nature, so please speak to us directly to understand how it applies to your goals and personal circumstances. So I'd like to start by discussing three main portfolio construction styles: index, core satellite, and active management. So it's important to recognize when it comes to asset allocation, there's no perfect solution. There are pros and cons with all options, and the aim is to find the solution that best fits your needs and investment preferences. A pure index approach seeks to give you the return of the index at the lowest possible cost. So that could be the diversified growth, high growth, balanced, conservative indexes. Unlike active management that is seeking to outperform the index, a purely index approach is the middle ground in terms of expected performance. There's minimal manager risk, as the manager's primary responsibility is there to construct a portfolio that basically replicates the index. So your risk lies with the performance of the index itself, not the manager's selection of investments. Jumping to the right of the slide, the active approach is essentially it's seeking to outperform a chosen market. So, for example, an Australian shares active fund manager would typically be seeking to outperform the ASX 200. Active management provides for the potential to outperform a chosen index, and by default, this also means there are risks that it can underperform. Typically, active management comes with higher costs due to the greater research requirements in identifying the opportunities to outperform. It also comes with a greater degree of manager risk in that you're reliant on the specific manager you have selected to perform better than the equivalent index option to justify these higher costs. Now turning to the middle of the slide, core satellite. So a core satellite approach aims to achieve the best of both worlds, combining an index approach at the core and taking a more active approach with the satellite positions in the portfolio. So think of the core as the sun and the satellite as the planets that orbit around the core. The core stays relatively stable throughout the cycle, but typically invested in a pure index strategy or something closely reflecting an index approach. And the aim with the core is to minimize cost and transactions. The satellite is the more active component of the portfolio, and there are a range of different ways a satellite portfolio can be put together, but in general, it's the more active part of the portfolio. So at Own Financial Planning, we offer our clients three strategy options to consider. And like I said earlier, there is no right or wrong. It's about finding the one that most suits your investment preferences and goals. So for all the three strategy options, they're available across the four main risk profile levels, being conservative, balanced, growth, and high growth. So once we've worked with you to determine the appropriate risk tolerance for how your portfolio is to be managed, the next step is to decide which asset allocation strategy best fits your needs and investment preferences. So the index strategy's aim is to achieve the relevant index return for your risk profile at the lowest possible cost. This portfolio consists entirely of the relevant index, be it high growth, balanced, or conservative. These portfolios are administered on the lowest cost platform we can find that is suitable for your needs and preferences. The index strategy is a complementary inclusion within our fee-for-service advice arrangements. The estimated annual costs for this approach, depending on the size of funds investment, is typically around 0.25% to 0.5% per annum. Our two core satellite strategies seek to outperform an index approach through the cycle through the management of the satellite components of the portfolio by identifying themes and fund managers that have a tendency to perform well at various stages of market cycles. And for both these strategies, we've partnered with iShares' enhanced strategic model portfolios to manage the core component of these strategies. For core satellite passive, we are aiming to identify relevant themes that have an expectation of outperforming and subsequently through selecting relevant exchange traded funds, better known as ETFs, that best represent these themes. For core satellite active, it again is about identifying relevant themes and includes similar ETFs that are in the core satellite passive strategy. However, in addition, we seek to allocate to active fund managers with a long-term track record, ideally 7 years plus, and that track record of outperformance of the relevant index appropriate for the chosen theme. So what is a theme? It can be quite a broad range of different things from technology to large global companies, emerging markets, small caps, health, property, financials, resources. There's a whole gamut of different themes that we can choose from, and it's about identifying the ones that we expect to perform well at certain stages of the cycle. So as there's active management required by our team for these two strategies, there are additional costs involved. And the typical cost for a core satellite passive, depending on the amount invested, and this includes the cost of the platform's administration, the investment management costs of the fund selected, and it also incorporates an advisor fee of 0.35% per annum. And the total cost is typically around 0.83 to 1.1% per annum, depending on the mix of the portfolio at any one point in time and the total amount of funds invested in the strategy. For core satellite active, it's typically between 1.25 to 1.55% per annum, again for the same reasons, depending upon the mixture of the portfolio, and it's inclusive of a 0.55% per annum advisor service fee. And both these strategies are available on both the Hub24 and Premium investment platforms, both inside and outside of superannuation. So a little bit about the core component of our core satellite strategies managed by iShares Enhanced Strategic Models. So the fund manager that manages these model portfolios is the team at BlackRock. And the BlackRock funds management team have got over 30 years of experience managing these diversified multi-asset portfolios. And these model portfolios have an over 8-year track record in Australia. And it's this depth and length of experience that was key in our decision to partner with them to manage the core component of our clients' core satellite portfolio strategies. And as you can see on this table, the iShares Enhanced Strategic Models have demonstrated a long-term track record of relatively strong performance to their peers and to the index, and across a range of different risk profiles. So a little bit about how we manage the satellite component. And the primary source of research influence for how we construct the satellite component of our core satellite strategies draws from the team at Property Share Market Economics, led by renowned economists Phil Anderson and Akhil Patel. And I encourage those that have an interest in these strategies to check out their website, propertysharemarketeconomics.com.au, and they have a range of research subscription options. The central premise of this research is the realization that while history doesn't repeat, it certainly rhymes. And their research demonstrates that economic cycles throughout history run, on average, 18 to 20 years in length. Never exactly the same and never exactly the same in length, but as a reasonable guide. And at various stages of the cycle, different themes are going to have a tendency to dominate. And so in managing the satellite positions of our clients' portfolios in these strategies, we draw upon this research and construct a diversified portfolio of investments that best reflects these themes that are expected to perform well at the present stage of the cycle. And as the cycle progresses, we actively recommend changes to these positions to remain at all times as best as possible exposed to the relevant themes. So I trust that gives you a good overview of the different asset allocation strategy options available to you and some of the thinking behind how those portfolios are put together. So if you'd like to learn more, you're more than welcome to get in touch. Thanks for listening.